In this presentation, we will work a problem related to a special offer. The data will be up top. We're going to put that data and format our own table, in essence, from scratch. If you would rather work this in a pre-formatted Excel worksheet, we will provide that as well. Either way, we do recommend that you put the information up top in the worksheet. In this case, it's here for us. If you're working a different problem or in some other place, recommend you put the data in this format with the text and then the numbers in a different cell so that you can refer to the numbers with formula, that being the most efficient way to do these types of problems, do them the quickest and in a way that you're going to get the most out of them. So our data then includes, we've got the sales price per unit, 490, unit sales per year, 4,840, that's how many units we're going to sell, unit capacity per year, 5,000. So remember, this is how many we could make, 5,000. We're close to that. We're actually making 4,850. We could make 5,000. That's kind of our cap there. And then we have the total cost per unit is 275, and the variable portion of that. So here's the total cost of that. 185 is variable. So the difference is fixed that we allocated basically to the cost per unit. Then the fixed portion there is the difference. 90 is going to be the difference between those two. So obviously the 275 minus the 185 is going to be the 90. So they may not give us this data. Sometimes they might make you do that calculation, right? The offer that we have is the units of the 900 units. We've got the price per unit is going to be the 450, and then the added fixed costs, 48,000. So again, obviously the offer is 900 units, and the price is lower than the price that we would typically have, which is 490. And the question is, well, should we accept the offer or not, just based on the numbers that we'll run here? We're going to make our table. To do this, we're going to say, all right, here's going to be our table. We'll have the headers. It's going to be the variable costs per unit, and then we're going to have the incremental fixed costs per unit. So I'm going to say, all right, incremental fixed costs per unit, and that's going to give us our incremental income. So we'll have our incremental income. And then we'll go ahead and format these. I'm going to select these cells. I'm going to go to the Home tab, and here's the Home tab, and then we're going to go to the alignment. We're going to wrap the text. I'm going to go to center the text. So there's going to be our headers. Now you might want them, if you don't want them making the cell too large, you could highlight these cells. I like to make them all the same size. So I'm going to select all those columns, A, B, or B, C, and D, make them a little bit wider. I'm going to make them wide enough so basically this cell is now a little flatter, and then you can basically make the cell a little bit smaller so it's not taking up quite so much space. And then you can select these items and go to the Home tab font. We'll make that black and white. So there's our formatting. We're going to start off with the sales amount for the incremental variable costs. Now we're considering, of course, the offer up here. So we're going to take the sales is going to be this 450 because this is going to, we're already going to sell at the 490 this 4,850. We're going to think about 900 more units that we would have to basically sell here. Notice that we're close to capacity. So if we took the 5,000 minus the 4,850, we only have 150 to get us up to capacity. That's why I'm assuming we have this added fixed cost. So to be able to do this, we would have to increase capacity with basically the fixed costs in order to accept a special offer of 900. So that's going to be into our calculation. So we got the sales, then we have the variable portion. So I say, all right, there's our variable portion. That's going to be equal to the 185 of the total 275. So we're only considering the variable portion, not the fixed portion. That's going to be the major key of these types of problems. That's going to give us our contribution margin per unit, which is going to be equal to the 450 minus the 185. I'm going to go ahead and format that with a Home tab font underline. That's the 265, and then we have the added fixed costs. So the added fixed costs, and I'm going to put this into the second column because these are the fixed costs. That's going to be the 48,000, and they're fixed. They are what they are, and this is going to eventually lead us to, or get us to, the incremental income. So then our income, then we have to do the calculation. We have our per unit amounts over here. We're going to get our incremental income, which is going to be equal to the 450 per unit times the number of units, 900. That's 405. We're going to say the variable costs change with the number of units. So that's going to be the 185 times the 900. There we have that. Contribution margin equals the 405 net income or income minus the variable costs, 166.5. We could format this home tab, font, underline. There's the 238.5. And then the fixed costs are just going to equal the 48,000. If we go ahead and home tab, font, underline that, we get to our incremental income, which is going to be equal to the contribution margin minus the 48,000. So the question is, should we accept the offer or not? And we're going to say accept the offer. Why? Because obviously we have the incremental income of the 190. So notice once again, we got the sales up top. The added sales are going to be 405. We're only considering the variable portion to get to the contribution margin. Why? Because of this 275 cost, only 185 is variable. So this $90 then is something that we would incur anyway. It's not relevant to our decision making. And that's going to be the key point. That's what you always want to look out for with this type of question. So that's going to be what we're basically removing from the calculation because it shouldn't be a factor in terms of just the numbers. So then we do have an added fixed cost, and I'm assuming this, of course, is because we're going above capacity and therefore have to rent the place possibly for more time to make more units. So we have to take that into consideration. Even doing so, however, we still have an incremental profit on that. So again, a one-off kind of decision we would have to make on a time-by-time kind of basis to see if it would be a good decision to make. So we're going to format this a bit now. I'm going to select from A15 to D19. We're going to go to the Home tab, Font, and we'll go to the Painter. I'm going to go to the More Colors, and we're going to go to the Standard Set. We're going to make that blue and say OK. And then we're going to go to the Home tab, Font, the Borders. We'll put all borders around that. I'll do the same here. We're going to go to the borders and to the blue color, and there we have that. Let's go ahead and double underline the bottom line number. Home tab, fonts, underline, double underline.